A client texted me. She is setting up a new restaurant and is very excited. And she wanted to know how to record a refrigerator she's purchased for her business. Now, generally, for most businesses, any equipment you purchase that is less than $2,500 can be directly expensed. There is no need to capitalize it. Any equipment you purchase over $2,500, you will need to treat as a capital expense. You need to keep a separate record of all of your capital purchases, and the total of all of these purchases will become part of your assets in your balance sheet. Also, if you have taken financing to make these purchases, the total of all the loans will get shown in the liabilities section of your balance sheet. So even though you cannot deduct the whole amount of the capital purchase from your revenue the same year, you can deduct depreciation and the interest portion of the payments that you make to the lender. So this purchase was for say $10,000 and this is for a refrigerator. This asset class can be depreciated over 5 years, which brings us to $2,000 every year. And you can depreciate it on a monthly basis. This amount is tax deductible and will be part of your operating expenses and will reduce your taxable income by that amount. You can also take interest that you paid for financing as a tax deductible expense. Say for this purchase again, $10,000, you have taken financing at a rate of 5% over 5 years. You would be paying principal and interest for the purchase, and you would take the interest portion as a tax deductible business expense. Bear in mind that interest expenses are generally separated out from your operating expenses because this is not part of your core business activities. It's more a financing activity. So this comes below operating expenses, but it's a tax deductible expense, and in your profit and loss statement, it would come before your taxes. I'm now going to show you how you can easily record a capital purchase along with depreciation and interest in my business bookkeeping spreadsheet. This is my business bookkeeping spreadsheet, the Mega Business Bundle. And to enter any capital expenses, we are going into the Capital Expenses tab. Over there, you'll enter the date, you'll choose the category, enter the amount. You can enter who you paid it to, the receipt number, any notes. Let's type in refrigerator. Next, you can enter the lender's name if you have used financing, the loan origination date, the loan amount, the maturity date, the loan balance, the interest rate, the monthly payment that you will be paying, and the collateral information and any notes. To record the depreciation, we are going to go into the Expenses tab, enter the date, choose the category as depreciation. Now the depreciation was going to be $167 a month, and that's what we put in there. Now the monthly payment is $188.71, and of this about $147 is your principal payment and the remaining $41 is your interest. To record the interest portion, we are going to go into the non-operating items, enter the date, choose the category as interest payments, put that as $41. Now if we go to the dashboard, you'll find under operating expenses depreciation of $167 in Jan, and if we go further down in the non-operating section, you'll find interest payments of $41. Then if we come to the income statement or the profit and loss statement, this is automatically generated, and you'll find over here under operating expenses your depreciation of $167, and under your non-operating expenses your interest payment of $41. Both of these reduce your income before income tax.
If you would like to see how this whole spreadsheet works and all of its features, watch this next video.